Well, carefully circumscribed independence is highly effective in delivering both price and financial stability. It can't deliver lasting prosperity, and it cannot solve broader societal challenges. This bears emphasizing because in recent years a host of issues have been laid at the door of the Bank of England, from housing affordability to poor productivity. Calls for the bank to solve these challenges ignore our carefully defined objectives, and they confuse independence with omnipotence. Monetary and financial stability are foundational. They're necessary for prosperity, but they aren't sufficient to deliver it. The biggest determinants of the UK's medium-term prosperity will be the country's new relationship with the EU and the series of reforms that that relationship catalyzes. Most of the necessary adjustments are real in nature and therefore not in the gift of monetary policy makers. The gains from independence have been enormous. In the 2 decades that followed, inflation averaged just below 2%, compared with over 6% in the 2 decades preceding independence. Inflation has also been 1/5 as volatile. And crucially, independence and the credibility that came with it allowed monetary policy to respond boldly and effectively to the biggest financial crisis in a century. And it leaves the Bank of England well placed to address a range of developments, possible developments around Brexit.